So let's pivot. Let's talk about
Yeah.
this. Powell was up on Capitol Hill. He was answering senators' questions. It's one of the big pieces of monetary policy people were waiting for, just to get a little bit of insight. And since we've had all this new data from employment from the BLS, but we've also just gotten a new ADP report, which is not a government report, private market, but so it's a little bit different metric. But the economy's still running hot now. We've got people are still finding jobs. We're hiring way more than we're firing. And, Senator Elizabeth Warren, kind of got on Jerome Powell, basically calling him out for saying that, they are trying to create unemployment. And they're like, you're trying to basically have 2 million Americans lose their job. What do you say to those 2 million Americans? His response was, well, what do you say to everybody else? What do you say to the other, 290 some million or however many people who live in the United States these days who are suffering from inflation, this hidden tax? What do you say? What do you say to that?
Well,
on a daily basis.
You say things are going to be more expensive. We want these jobs. That's what I said.
Yeah, you can say that. You can say that, but
I'm not Jerome Powell, and my point and the whole thing about communication is, Powell's remarks there's only like billions and trillions of dollars that are listing for the smallest, subtlest signal that interest rates might increase or decrease, and hearings and appearances on a panel like Jay Powell made in front of Congress this week. They are it's not like a ritual, but it's definitely carefully measured and carefully crafted. He doesn't want to seem like he's going too strong or too soft, but there is still a little bit of things that are open to interpretation. If Powell didn't open his mouth, then maybe we wouldn't have the headlines that said, stock signals are down after he has said that, maybe it's running a little too hot.
But that's been some of the criticism recently, is that the Fed is being too transparent and trying to communicate what they're trying to do. I think, depending on, what day of the week it is, you get people saying the Fed needs to be much more transparent or less. But the reality is, anytime any of the Fed governors speaks, obviously, especially Chairman Jerome Powell, it has a major effect of moving markets. To your point, Matt, people are trying to parse every single word and read in between the lines and go through the beige book and read the minutes. But a lot of this is intentional, is they're trying to throw water on the stock market or the employment market. But
they don't.
I don't know. I don't know.
They always try to. It's almost like they want to throw water on things, or at least maintain a little bit of mystery. He's a little bit coy about things. Like, oh, I know, I'm not going to tell you. But justifiably so, because he knows. But so what he specifically said, I think, that sent everything in motion was on Tuesday. He started saying, and he kind of finished saying it the next day. On Tuesday, he said to the Senate, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. Okay, and then on Wednesday, he said, if, and I stress that no decision has been made on this, if the totality were to indicate that faster tightening is warranted, we will be prepared to increase the pace of rate hikes. So he tries to, tries to lessen or dampen his hawkish comments from Tuesday, but the point is still pretty strong. But to me, his comments on Wednesday really didn't do much. We're 6 days out from the next CPI print, but the last one did not signal rampant inflation. However, the PCE, which is the personal consumer expenditure numbers, they were released on February 24th, so a little old, but they're more worrying than the actual CPI numbers. And they have inflation, PCE inflation, going up 0.6% in January compared to just 0.3% the month before. I think that one of these things that, you can interpret things however you want, but the sign and the data that is coming in, and you may have mentioned the jobs numbers too from ADP. Those numbers are not, they're not good signs. And we could be headed easily, I think, for a 0.5% rate hike.
Yeah, no, I mean, certainly they wanted to put that on the table to communicate to markets of hey, we're not done yet, and we're not going to be done. I mean, think about that. Who are the people who are really saying they need to bring interest rates down or stop doing it? It's like people in the stock market. It's like it's the investor class that's saying this. like we're like, we want our deals to pencil, so I need you to bring interest rates down. They're looking at it and saying, yeah, but our unemployment rate is in sub 3. In many markets it's 2. It's in some Indiana markets it's under 2%. Like, so why? And we have inflation. We have caught people are spending more money on eggs, on whatever.
Well, and that,
like,
and I,
why would I lower interest rates for who?
yeah, because people's experience with inflation is a lot sharper and more painful than I think in general than the average person's experience with interest rates. They're not following them. They engage with them maybe when they're buying a home or a car or something
Unless
like
they're
that.
buying a home or a car, and it's even probably less on a car. It's really when you're buying a home.